JB here. Hope everyone's doing outstanding. Thursday, July 17th, 8:56 a.m. Talk really quick about the market. Some names I'm looking at go from there. S&P futures into the green. Spies up here at 625. Was chopping around in the red overnight, then back in the green, then back into the red. Was kind of flat. And then we had retail sales data came out this morning, better than expectations. Jobless claims came out better than expectations, right? 221,000 versus a 233,000 estimates. So the hard data continues to be strong. I mean, it's like a broken record ever since April. I mean, it's all I hear, during the Fed statement and then the press conference was Powell. That's what I hear in his head, just repeating that. Oh, the hard data remains strong. Remember that consumer confidence, right? The worst since 2020 or whatever. That data came out, everybody's up in arms. Oh my gosh, this is the start of it. But to me, I keep thinking about that article about tomatoes from CNN yesterday, right? And it's like if you don't trade, you just read the headlines and read these articles and the thing, then yeah, your survey, if you're part of the survey that does consumer confidence, it's not going to be high, right? If you think that restaurants are going out of business because tomato prices are going to go up 17%, then yeah, that makes sense. And again, I'm not trying to dismiss that, right? I mean, it stinks. If you're a restaurant or small business and you're used to prices being a certain price, yeah, that's frustrating. That creates uncertainty, anxiety, all that stuff. But sometimes it's like change. Change is never good. I always bring up this analogy too. It's like back when credit cards used to have like this little machine, this little device, the clicker, right? You run the card over it with the carbon copy and you hand that to a customer, and people like, wait a second, this is going to replace the dollar or current, the penny, the nickel, the dime, the quarter. Like this is nuts, right? And that disrupted things, right? And then you swipe it through and then you sign, right? And I remember when there was folks would figure out ways to change the magnetic stripe on the credit cards, and then the Eurozone already had chips in the cards. US didn't have chips. And I remember going to Europe and you'd put your card in there with the chip. I'm like, what is this? So is things change is never easy. Change is hard. People don't like change. It happens. And you just hope when there's change that things come out better, right? It's like sometimes pulling off the band-aid, it hurts at first, but then your wound heals. So we'll see how this all plays out. But for now, the big news yesterday was Fed Chair Powell, and you still have a lot of folks talking about it. You had, markets were in the green, and then 11 o'clock, it's like, oh, what? Something just happened. You saw yields spiking, the dollar weakening, and the SPY went from 623 down to 618 in about 20 minutes. And it's because reports came out that Powell's close to being fired by Trump. Trump had already drafted a letter of the firing and showed it to some leaders and also discussed it with leaders. And then, of course, 25 minutes later, he's at a press conference and he pretty much says, oh, it's unlikely I'm going to fire him unless there's fraud, right? And, the Fed has been building or at least refurbishing their headquarters, and Fed's a independent agency, right? So they're in charge of their money, they're in charge of building and all that stuff. So it's not like it has to be approved by Congress, but their building was approved in 2020 to get refurbished and what have you. So there's been construction going on. There's delays since 2023 on one of their buildings, and so now they're bringing that as a possible fraud thing. Like Powell wants, Trump said he wants to live in a palace. Anyway, so we'll see how that all plays out. I keep saying the best closure to this, and there's 9 months, whatever, till May when his term ends, is that you have to have a shadow Fed chair, and then when it comes May of next year, boom, we move on. So I don't think it's the last of this. We'll have to see how this all plays out. But to me, you saw what the market did. It was like an appetizer yesterday. Yields yield soared, the dollar weakened. I mean, if removing Fed Chair Powell was bullish yields, right? I mean, bullish that yields would come down, that was not the case, right? So it's like, even I think if he got fired and a new Fed chair came in and lowered rates, I think yields would still soar. That's like the conundrum, right? And then you get to a point of a path of no return, right? So the thing is, if you want the U.S. debt to go down, you want to be able to service the debt, you need a function of a couple of things, right? If yields were lower, it costs the interest payments on the U.S. debt is lower, right? Also, a lot of that debt is foreign entities, right? There's Japan, China, some of these countries hold a substantial amount of the U.S. debt. So if you're paying out these interest payments to foreign entities, US dollar going up makes those, again, it's like a double whammy. So we'll see how this all plays out. I just hope play the course. Fed cuts rates in September. We can move on. And that's that. All right. So that's kind of overall markets. But now you got to be aware of these headlines. You know, to me, it's like the tariff situation, right? It's like the markets become numb to it. So hopefully we get a little less moves. Like everybody was waiting for an excuse to sell, and then that came out, and boom, everybody was selling. Just hopefully that uh, doesn't happen. You know, it's less muted move, and he doesn't fire. All right. So that's overall markets. Also, U.S. dollar bounced. So another strong this morning too. It looks like it's gonna be 98.50 or so. Look, I didn't even pull it up in the last 15 minutes or so. 98.70. So it's still up a 30%. Monster move for the dollar this week. And then yields ticked down a little bit yesterday, but still that 30 years got to come under 5%. I think if that happens, sets things up for maybe we get to 630 next week on the SPY. I didn't do a lot of posting on Netflix on the watch list this morning. I forgot, but I was talking about yesterday. Premiums are expensive. I would assume, not assume, but I expect a beat and raise. Right? They're removing some of their subscriber data, so it's less about the numbers. Right? That used to be the big thing. Right? When Netflix wasn't generating profits, the way to look at future growth was, are they, how many sub ads do they have? Right? So removing that metric kind of takes away, I guess, what could be construed a negative, right? So if the top line and bottom line beat and they have decent guidance, then you have to assume the underlying subscriber ads are good, right? So I think that kind of takes out some volatility. It's just you look at the calls and it's like you got to go to 1,400 weekly strikes, which expire tomorrow, $3.65, and who knows what it does here today. But even yesterday, the stock was kind of flat, and the premiums on both calls and the puts were down. So we'll have to see how that plays out. All right, so now just quick individual names. Joby, what a monster, up 35% this week, 17% yesterday. It's gapping higher again this morning, was 17.24 at about 4:30 this morning. And then uh, still chopping around here. I put this on a watch list too. I think it can go over 20 today and tomorrow, or even start of next week, or it can go back down to 12. And either scenario would not surprise me. Of course, I think the former, right? And it would be nice to see that happen, but I would not be surprised to see a pull at some point. But I continue to lock calls in on the way up, lock some more of the August strikes in for 600%, lock some of the October strikes in to cover costs. And then of course it's painful to look at the July 11 strikes that I had that are going to open up about $6 or $7 here today. But it comes with the territory. Large short interest. Keep talking about there's people who've been short this name, so don't want to be in a spot where something comes out and I lose the profit. So there's something worse than not locking in profits. It's not locking them in and seeing those go red. So continue like this one. Maybe some chop here today, and then it would be nice to see it close over $17. That's Joby, and then SERV, right? I mean, hopefully we get day 2 of this run, up 10% yesterday. No news or catalyst. And the funny thing is, you look and the small caps weren't that strong, and look, they're down again today. So actually, it just went green. Good sign. My thought on that, right? It's $670 million market cap, so it added $60 million in valuation yesterday. The company is going to do like $1.2 million in revenues in the first half. It's going to do 60 to $80 million in revenues next year, and that's probably just a ballpark figure. It could be more. I mean, it could be less. Company has $200 million in cash, so it's pretty much a $400 million company that's going to be hyper growth soon, right? I mean, just think about 1.2 million in revenue. So even if let's say they do 4 million for the year and they're going to do 60 to 80 million next year, that's a 1,500% growth. So right now, even at its current valuation, you're looking at 10 trades, 10 times revenues, which is nothing. I mean, you see some more mature companies trading at substantially lower valuations. Or higher valuation, excuse me. So I think there's room to run, right? So I mean, first 13.75, then $18. Yeah, and it's another one of these names. Like you look at Joby, and it's like I don't think a lot of people knew about Joby. And the more it gets headlines, the more people talk about it, the more it's covered, the more people say, "Wow, this is a great story." So, uh, and I hate to use like once in a lifetime opportunity, right? I don't think it's once in a lifetime, but all right. So that's SERV. Really like SERV. As it continues to go, I'll continue to look for opportunities to lock some in on the way up. And if I said 11 yesterday, so when it hit 11, I went and got some October strikes. I um Wait, what am I talking? I'm talking about the Joby locking those in. Sorry, folks. Um, I'll continue to look for opportunities to add strikes. So when it got over 11, I got those August strikes. If it continues to head higher, I'll look for more strikes to play for upside. All right, that's SERV. And then I keep talking about this list I'm going to do for earnings, right? So you have some names. Deck got a positive analyst note this morning. Uh, the TTD, the Dexcom, MDB. So those are some of the names I'm looking at for possible earnings trades, and DELL, right? Those are some of them. And I just got to do more research to find the implied move. So I'll have that out by the weekend, I think, because there's still some time. But of course, a lot of it's going to do with Netflix here. So if Netflix reports a decent quarter, then it kind of like sets the stage. You already have bank earnings, strong earnings, but is some of that because of the tariff-induced trading volumes, right? So I mean, some of them posted great beats and raises. Some of that was attributable to that the volatility, right? Volatility is good for for banks, right? All right, so that's overall markets. That's individual TTD. Oh, VKTX announced their earnings days next Wednesday. I don't think they're going to announce anything in regards to the data, and as opposed to just saying, "Oh, data's going to be out by August," right? Well, they're going to say back half, but you have to assume it's going to be August. By that time, I'll just have the August strikes already locked some of those in. I'll continue to hold those. Reddit still has a bull flag set up here. Was selling off with the rest of the Nasdaq yesterday morning, then missed the bounce, but I'll still close red. I'll be watching again for lottos. Always a great lotto trade. And then here's Deck, right? And here's another name. I mean, look at this fall from grace, and you have to think, right? Some of it, you look back at the start of the year, the whole echo chamber of recession, right? That's what you heard everywhere. Oh, we're in a recession. When April, the Liberation Day come, folks were saying we're already in a recession, right? And so some of these moves, and Roku was a great example. Oh, Roku's another one for earnings. Uh, but Roku's another example. It was selling off not because of hardware sales or whatever. It was selling because people are going to cut back on streaming services because we're in a recession, right? So you look at Deckers, and Deck sold off from earnings. Some of it was their inventory, but then some of it's recession. Then it was tariffs. Then it was the earnings, and earnings were decent, but not good enough. And then it's been chopping around, and now you look, and it's like just hit actually multi-year lows yesterday. So uh, maybe and even if they don't have a beat and raise and the stock reacts, maybe it's a premium build into earnings, right? So that's kind of the thought process there. RSI got under 30. That's typically oversold, but I mean, you look through all the way through February, March, and April, the RSI was under 30. So I think that's it, folks. Trying to think of some of the other names here. I'm going to be in and out of the chat room between probably like 11:30 to the close, but I'll be around. Let's have a great day, folks. Rock and roll.